Breaking news for the financial markets. Personal income report is out. June gloom for the consumer, but don't get carried away with the weakness characterization. Even if they didn't visit the shops and malls in June, real consumer spending in June was flat, as in 0.0. May's 0.6% burst is now a gain of just 0.4%. We already know what the consumer did in the second quarter with the real GDP report out just on Thursday, a day after the Fed met and said they wanted to see some more proof, just a little bit more, that the economy was moving along before lifting off. We said don't get concerned over the flat spending in June because consumers went on a buying spree the previous 3 months. Strong real spending in March, April, and May. On a quarterly basis then, real GDP was a rock-solid 2.9% in the second quarter, faster than the 1.8% spending in the cold winter weather start to the first quarter this year. The consumer is going to be okay. Relax, Fed officials, those of you worried about retail sales earlier in the year. Inflation, any inflation out there? The personal income report out this morning also has the Fed's preferred inflation measure, personal consumption expenditures, PCE for short, the inflation number that stands behind the purchases of everything consumers buy in America. Headline PCE inflation up 0.2% this month and just 0.3% for the last year. Does this mean there is no inflation? Of course not. Headline inflation will rise back to the core inflation level once those falling gasoline prices wash out of the year-on-year changes data in February next year. The key to the inflation outlook is core PCE inflation, and not much of it here to see. The monthly core gain is 0.1% in June. You know the story. The more 0.2% changes we get, then core inflation over a year's time starts adding up to more than the Fed's 2% inflation target. We only have one monthly 0.2% number since January this year, so inflation pressures are not rising yet. On a year-to-year basis, core PCE inflation is running about the same as it has been, 1.3% in June. Net-net, consumers kicked back a little and apparently sat the month of June out, away at the beaches and mountains doing nothing. No real consumer spending at all after a blistering sales pace in March, April, May. You have to take the consumer's temperature on a quarterly basis, though, because the monthly data can be volatile. And here, consumer expenditures in real terms were high normal at 2.9% in the second quarter. Finally, the Fed's preferred inflation measure, the same as it always was, up 0.1% in June for the month and up 1.3% from last year. Obamacare is one factor holding down core PCE inflation lower than the 1.8% reading for core CPI inflation. Think too low inflation will keep the Fed's heels cooled this year when it comes to a rates liftoff? Think again. Those leaked Fed economic staff forecasts show the Fed funds rate moving up later this year, September it looks like, and up to over 3% without PCE inflation ever moving above 2% again. That's right, no inflation and yet interest rates going up anyway. In sum, flat real purchases on the part of consumers do not a quarter make. 1 month of it anyway. June was gloomy, but consumer spending was steady at 2.9% for the full second quarter. Once again, the economy is stronger than you think.